Is this the end of index funds? I'm going to present some graphs. We're going to look at the market returns of index funds versus the Mag 7. Index funds, of course, have grown in popularity over the last 10 years. And when I was really saving aggressively for retirement, I followed Dave Ramsey, I followed Vanguard and the Boggleheads and the Fire Community and a bunch of others that all promoted investing in low-cost index funds. And the reason why they become so popular is because they're low cost. Compare a mutual fund, an actively managed mutual fund like the ARC fund, by Kathy Wood. Their management fee is 2.5%. Over years and years, over 10 years of investing, your earnings are just getting eaten up. So they've got a much higher bar to jump over in order to gain that 2%. You're getting 2% charged right off the top. Index funds like Vanguard, they'll charge 0.04%. So practically nothing, which is why index funds have become so popular. So let's jump into the graphs here and start first of all, which the market share. You can see the line going down is actively managed funds that will charge you between 1 and 3%, have become less and less popular as passive funds or low-cost index funds have grown in popularity. And they are now, this graph is a couple years old, the index funds are actually now more popular. They're becoming even more popular. The Vanguard fund just became the largest passive index fund, the VOO, eclipsing another index fund. So the index funds are the largest funds. And we've been told for 10 or 15 years that that is the best thing to invest in. But I don't know if that's still true. Let's walk through some of the evidence and then we'll talk about what's driving this. So it's the Magnificent Seven. The Magnificent Seven have driven most of the returns, and we'll look at a graph in just a second, driven most of the returns in the market in the last couple of years. The Magnificent Seven, of course, are NVIDIA. This is the returns a couple of years ago. NVIDIA led and still had a breakout year last year. Meta, Tesla, Amazon, Alphabet, Microsoft, and Apple. And you can see this graph is from 2023. We'll look at 2024 in just a second. And you'll see the returns of the S&P way down there at the bottom at 24%. So the Magnificent Seven, obviously all tech, all super high growth, high earning stocks, that they had a banner year in 2023 and 2024 and outperformed the S&P that had a 24%. You'll see the very worst stock in 2023 was Apple, and it still was double the S&P, double the return of the S&P. Now let's look at 2024. This is a graph showing that Magnificent Seven in 2024 had an aggregate return of 70% versus the overall stock market, the S&P, which an index fund would track, had a return of 24%. So 24% is great. The average annual return in the market is about 10%. So it was a banner year last year, mostly because of the Magnificent Seven, those tech stocks that are driving everything. So, and this is of course from Opening Bell Daily, their graph. And if we look at that, take that further, and we'll see that the S&P, or we'll call it the S&P 493, not the S&P 500, the S&P 493, S&P minus the Mag 7 returned in 2023 4.1%, and in 2024 6.3%. So if you take out the Magnificent Seven, you take out those top stocks, then the rest of the market is pretty much flat, especially considering that we've had inflation from 3 to 5% the last couple of years. The whole market minus those 7 stocks is flat, including inflation. And when you put those stocks back in, then the market looks pretty good, 24% and 23%. But the Magnificent Seven are driving everything. So I can conclude, and you'll leave it to you to conclude whatever you want. But it looks like the place to invest, and if you think this will continue, is in the tech sector, is in tech stocks, and not just in the index funds, in the low cost index funds. I believe this will continue into the future, at least in the next 5 years. given the rate of technology that we're having with AI and with everything that is driving AI and now robotics coming online. In fact, just today, Elon Musk posted on X that the singularity is almost here. The singularity is a point where technology is advancing so fast that we can't keep up with it because the tech is kind of running away. It's developing itself, and we're starting to see that with AI. Some of the agents that are coming online that can do things for you, and if you believe that technology will continue to grow and that AI is going to continue to grow and increase efficiency and drive profits to companies like the Magnificent Seven, then that is the place to be, and not in the S&P 500 or the index funds. Maybe something like the QQQ or the Nasdaq, or specifically investing in these stocks. Of course, this isn't financial advice. I'm just presenting the information. I'm just some guy on YouTube. But consider that when you're looking at investing. And then what is driving that? Of course, AI is driving a lot of that. NVIDIA was one of the top performing stocks over the last year, not including MicroStrategy. And as an example, this came out yesterday. I believe that AI and tech and robotics is going to be, that intersection is going to drive a lot of the earnings. This is a company called Neo, and Figure came out with a similar video, and Tesla with their Tesla bot comes out with a similar video. This is a mock-up of a humanoid robot that they built to be used in the home. There are a lot of robots that are already being used in factories, and this one is built specifically for use in the home. So this company and others like the Tesla bot, they all have brains built into them. You can see here it's got a custom built LLM for natural language interaction where it can talk. You can give it instructions. A bit of a mock-up. It's just got some music there, not really describing it, but it's a mock-up, and it's simulated. It's not for production yet, but these type of robots are getting better and better. And this is the kind of technology that is driving not the Mag 7 to outperform the market. And these robots will be coming on the market in the next probably 3 years. Tesla has announced that they're going to build 10 to 50,000 of these this year. Mostly they're going to use them in their factories and with partner companies, and then they're going to double that next year to 50,000 to 1,000,000, and then try to double it every year. So we could be seeing this changing the market completely in terms of productivity. Add an LLM brain to it, just like you get with ChatGPT or with Grok. That same intelligence is going to be in the brain of one of these robots, and the earnings for the companies that produce these robots are amazing. Tesla has said that they're projecting that they're going to sell these for $20,000 to $30,000 at 50% profit margin, which means trillions of dollars flowing to Tesla and companies that run these, like NVIDIA, that run the chips for the processors or the computer hardware that runs these robots. So this is just one example of the technology that is driving the Mag 7, which is in turn driving the S&P 500. So if you're a very conservative investor and you just want to stay in the S&P 500, the Mag 7 will drive the S&P 500. But if you want to get more specific and look at what is the engine that's driving the S&P 500, then look at the Mag 7, as we saw from the graph, is driving everything. And what is driving that is the innovation that is coming from AI built, the LLMs, and robotics, and the combination of AI and robotics, and maybe some crypto that's going to be doing all the payments between all of those. So lastly, to wrap up this video, and thanks for watching. If you've got any questions or comments, or if you think this is good or bad, then leave a comment down below. And lastly, let's look at our morning download stock analyzer, where you can type in any stock here, and it will give you an overview of the company, the analyst recommendations, and we're just looking at that top stock, NVIDIA. You can see that our stock analyzer will go out and aggregate all of the analyst recommendations, and this is showing a strong buy. And then one of the things that I like, we can go down here and you can see here how it breaks up with the different recommendations from different and how many analysts. You can see that 24 analysts rate NVIDIA a strong buy, and 38 just a buy, and 7 a hold, and none sell or strong sell. And then if you want to do more research, you can scroll down here and you can see the news and analysis. There are 5 stories with links, and you can see these stories are all from today, so it's all up to date, it's all current, that are leaning bullish. And then to get a fair view of the stock and the market, you can scroll down, and there are 5 articles that are more, the sentiment is more bearish. So it gives you both sides, so you can make an informed decision. So let's do one more looking here. Let's go over to Meta, and haven't done this yet. Meta platform. So this is of course Facebook, number 2 on the list. It's got a $1.73 trillion market cap. And you can see here that it is mostly a strong buy. So the analysts are, and has had a good year. The analysts are projecting that this will continue. If you trust the analysts, you can see here that most are rating that a strong buy, that the market is going to continue, and these earnings are going to continue. Let's do one more. Let's do Tesla. I've mentioned them. And I believe that Tesla, the analysts don't always get it right, because Tesla is rated as a car company and not the tech company that it is. And of course, Elon is in the market, in the news a lot, so that's affected the stock. You can see here, not as strong as the other two, but consider that it's mostly rated as a car company when they have a lot more than just cars. They've got the solar pack, the energy packs, that is probably $1 trillion business. They've got the Tesla bot coming online. And then if you want to look at the stories, the bullish stories are here and the bearish stories are here. So if you're interested in digging into this and putting in some of the stocks that you like, you can go to the analyzer. There'll be a link down below, or if you don't find it, then comment and I'll post it. So that's my update on where the returns are coming from in the market, the Magnificent Seven, and why we should consider looking into those stocks. So if you want more up-to-date information on what's happening in the market daily, then go to the link below and subscribe to our daily newsletter where we break it all down at morningdownload.com. And thanks for watching. See you next time.